guys, Kristin Jamieson here with Success Mortgage Partners, and today I have
Justin Allender.
All right, Justin, today we're going to be talking about tax time, like super fun time, especially in our industry. But we get a lot of questions in regards to tax returns and tax refunds and how it can be utilized in the mortgage process. So Justin, let's talk about tax refunds for a little bit.
Yeah, so this can be a great way to get a down payment or help prepare for some of your closing costs. But before you go and spend that tax refund, come talk to us, give us a call. We need to make sure that we're making a great strategy for you to talk about what collections or credit cards or small loans that you might want to pay off first or not pay off to make sure that we're using that money to the best of your ability. Kristin, what's some other things that we need to worry about with tax season?
Okay, so tax returns and self-employed borrowers. I know you guys have heard before that student loans are the reason why I don't sleep at night in my industry. Well, the second reason why I don't sleep is because of self-employed borrowers and their tax returns. So I always ask my self-employed borrowers to send me a copy of their tax returns when their accountant sends them back to them for review prior to filing with the IRS. So there's certain deductions that a self-employed borrower can take that from a mortgage standpoint, we can add it back in as income. So for instance, somebody might want to take mileage on their vehicle, which is totally acceptable. From a mortgage standpoint though, from an IRS standpoint, you're getting to write off 55 cents for that mile that you drove for work. From a mortgage standpoint, I can only add back in 22 cents. Another deduction to look at maybe is, or to talk to your accountant about over, maybe taking a mileage deduction would be looking at depreciation. Because from a mortgage standpoint, I get to add back in every dollar of depreciation to qualifying income. So it's just, we can get a little bit creative, but I would just make sure you have myself or Justin or your loan officer on speed dial, especially around tax time. If you're thinking about buying a home, I get it. Nobody likes to pay more income taxes than they have to. But from a financing standpoint, unless we're doing one of those non-QM or non-qualified mortgage loans, if we're telling the IRS we're not making that income and we're not paying taxes on it, then we can't use that income for mortgage qualifying, if you're catching what I'm throwing out there. So, but one other thing with self-employed borrowers, Justin, so we always have to have what are called tax transcripts, right? And if we need 2019 taxes for qualifying and closing, when do tax transcripts usually come, and is there any way around that?
Typically tax returns, once they're filed, it takes about 6 to 8 weeks for the IRS to actually process them and make them available to us in the mortgage industry for us to order a transcript, which is basically a record of your tax transcript. But there is a way for us to get a certified copy of your tax return, but it does require us to jump through a couple small hoops. Kristin, I think most importantly is you cannot electronically file these taxes.
If we're going to need them and you're wanting to close sooner before the tax transcripts come back, the best thing to do is to actually take your tax return, and you need to take 2 copies to the IRS office that's closest to you. And if you're in our area, Maitland is the closest office. I do suggest always making an appointment before you go to any government office, but especially the IRS office at tax time, because they really aren't going to take walk-ins, especially this time of the year. But you need to take 2 copies of your return to the office. They will sign and stamp it. And the reason why that's important, from a lending standpoint, what are we looking at? You already provided us your tax returns, right? Like, what more do we need? Well, what we're looking for is what you gave us is what was actually filed with the IRS. I know nobody on here watching this video would ever do it, but unfortunately, I've gotten people, or I've had people give me tax returns that were not what were filed with the IRS. So we are in a way combating mortgage fraud, and we're just crossing our T's and dotting our I's and making sure that we're using the correct income calculation. But again, 2 copies of your tax returns, local IRS office, they'll sign and stamp it. If you owe a tax liability, we are going to have to document that those funds have come out of your account. So you would want to pay those while you're there, or also file the installment agreement form with your IRS tax return saying, what you can pay as long as it's minimum what the IRS will take. So, there's a few things that we have to do, but we can definitely close without tax transcript for all borrowers prior to them coming in, as long as we do it right the first time. It's just, if we're not doing it right the first time, we can't go back and fix it. So that's why we wanted to do this video, get it out there, just make sure we were all aware and on the same page. But at the end of the day, if you or anyone you know has any questions on income taxes, tax returns, tax season, what you can do with your tax return money as far as buying a house, don't hesitate to reach out to Justin or myself at 352-242-1535. Thanks and have a great day.